creating wealth, freedom, and security using real estate investing. This is Get Real Wealthy. You're watching Quentin D'Souza, and this is Get Real Wealthy. Here we go. We're going to talk about alligators. Not the kind that chop off your leg while you're playing golf. We're going to talk about alligator properties. These are negative cash flowing alligator properties. Negative cash flow isn't good for you if you're trying to grow a portfolio of properties. Negative cash flow prevents you from growing your portfolio. You have to work harder at your job to pay for the deficit in a property that's negative cash flow. So when I say negative cash flow, if I buy a condo in downtown Toronto and I put 80% down and my mortgage fee is $2,000 and my condo fees are $500 and my property tax is $300 and my insurance is $100 and my rent is $2,500, I am losing money every month because I have to bring money to the table every month in order to be able to hold on to that asset. Some people will look at that and say, oh, well, I've got mortgage pay down that I'm making on that asset. So it's really not negative cash flow. Yeah, until the market shifts and the market shifts in a different direction and all of a sudden you lose money on that and your negative cash flow, you're not going to be happy to hold on to that asset. Sometimes what people will suggest for you to do is put more money down. Yeah, put more money down. So you're going to buy a condo or you're going to buy something and put 50% down because that's the only way that you're going to get a positive cash flow asset. Well, instead of buying, 3 duplexes that gives you positive cash flow, now you got one condo that's giving you positive cash flow. You have to be able to look at your what you're investing in, make sure that they are going to give you both cash flow and appreciation. That's what we want to see in any asset that we buy. When I have a negative cash flowing alligator property, I have to work harder in order to pay for that property. That is called a liability. It's not called an asset. We want assets, okay? So what if I have to put more down payment on it to make sense so that it's cash flow neutral? I say that that's an inefficient use of cash. That you should be able to leverage your properties as much as possible to have positive cash flow and be able to continue to purchase assets because you have positive cash flow. Usually what happens is somebody is probably selling you something, to be honest. They're probably selling you something because they're going to make a commission on it. And that's why they're selling you this particular asset, because it's in their, what they're selling right now. And, this is how to make it cash flow positive. I am not a realtor. I'm not a mortgage broker. I am an investor. I've been doing this for almost 2 decades. I can tell you that it doesn't make sense. What you're doing is you're betting on appreciation and increases in rental income. Now, what happens in different times? Well, look at Toronto when they got rid of the Airbnb rules, because people were pushing on buying properties and condos in areas, and the only way that they could be cash flow positive is that they were Airbnb-ing their property, short-term rentals. And as soon as we get an issue that like Toronto comes in and bans all Airbnbs, all of a sudden it doesn't cash flow anymore and the properties are underwater, and then you have people that are forced to sell. Or you had a situation in the last few years with COVID and then people moving out of the core into the suburbs, and all of a sudden you don't have the demand for those rental properties in that area, and all of a sudden now the rents are lower and now you're even less cash flow and having to bring more money into the table in order to get things done. Those are things you have to consider. Now, I'm not just harping on condos in downtown Toronto. This could be houses in different areas. It could be in London. It could be, sometimes you look at a property that's single family home in London, and like if you buy that, somebody might be telling you it's an investment. It's not really an investment if you're putting money into it every month. That's called the liability. Okay, so make sure you understand the difference between an asset and a liability. A liability is something that costs you money all the time. An asset is something that pays you money all the time. So that's what you want to do. The other thing that happens is it becomes harder for you to get mortgages because you're betting on appreciation. The bank is going to look at you and they're going to look at your debt coverage ratio. That's how much debt you have and how much income you have bringing in. And when your property has a low debt coverage ratio, let's say for every dollar you get, your expenses are $1.20. Why would they want to give you more money? It doesn't make sense, right? You're losing money every month. But if for every dollar they lent you, you're making $1.20 or $1.30, they are more likely to be able to give you more properties. So that's what they want to do. So if you're trying to build a portfolio of property, you need to be good with financing and you can't be buying alligators. What you want to do is find cash flow and appreciation. And there are tons of places around North America where you can find cash flow and you can find appreciation. And you want to be able to finance those properties in the future. If you want to learn more about that, you can always reach out to me at Quentin at getrealwealthy.com, or you can book a 15-minute call at quintindesouza.com, which both you can find in the description below. I hope you have a better understanding of the alligators that are out there and how you should avoid them. Remember, cash flow and appreciation, not or. Have a great one, and we'll see you on the next episode. Make sure to check out getrealwealthy.com. Until next time, I'm Quentin D'Souza. Get out there and take action. The views and opinions expressed in this podcast are provided for information purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to getrealwealthy.com.